Indicators are very popular for identifying trade setups, entries and exits. And depending on how you use them, they can be very easy to use and give very clear trading signals. But out of the hundreds of indicators available, which indicator is best for Forex trading? Well, I went over to ChatGPT and simply asked it, what is the best indicator for Forex trading? And it actually gave me 9 answers, 9 different indicators. But I chose the number one, and then I asked it, how do I use this indicator for Forex trading? It then gave me 9 steps. I don't know why 9 seems to be its favourite number, but it gave me those 9 steps, which I worked through. And what I ended up with was a profitable Forex strategy, which anybody can trade using the right parameters. I say profitable because step 9 actually recommends backtesting the strategy, which is exactly what I've done. I backtested it and I got us 15 years worth of trades using the suggested strategy. So by the end of this video, you'll see how, with the use of ChatGPT and some backtesting of my own, we came up with a profitable Forex strategy using the so-called best Forex indicator. Which indicator did ChatGPT rate as number 1 on its list of 9 indicators? Well, here's what I asked it, and here's what the top answer was. The good old moving average. It mentioned the 2 most common moving averages. That's the simple moving average and the exponential moving average, the SMA and the EMA. For the tests, I'm actually going to use the SMA, but the results wouldn't be drastically different whether I use the EMA or the SMA, so don't worry too much about that. So now we know the best indicator. How does it suggest we use that indicator to make money in the Forex markets? So my next question for ChatGPT was, how do I use moving averages to trade Forex? And it suggests the best way to use them is to help us identify trends. Looking at the list of 9 steps it talks about when trading with moving averages, step 1 talks about the type of moving average. Step 2 then goes on to talk about which time frame. Obviously, we can use whatever time frame we like with moving averages. The shorter the time frame, typically, the more frequent the trades we're going to get. Step 3 talks about the length of the moving average. We can adjust this to whatever we want, from 2 to 200 if we like. Now we're actually going to be using 2 moving averages as suggested later on in step 5, and for the test I'm going to use the lengths of 9 and 18. I'll explain why I chose those lengths a little bit later on. Step 4 is plotting those moving averages on your chart, and I'm sure everybody knows exactly how to plot the moving average on the chart. Now step 5 suggests how to use a moving average, or how to use the 2 moving averages. And it suggests using a moving average crossover. Our trade signals come when the shorter moving average crosses over the longer moving average. And in our case, the lengths are going to be 9 and 18. So we're going to go into long trades when the 9 or the shorter crosses above the 18 or the longer, and the opposite for short trades, when the short moving average crosses below the longer moving average. So let's go and have a look at the chart. Let's get up to step 5 with the moving averages on the chart before we move on with the development. Here's a 4-hour chart of pound yen, or 240-minute chart, and you can see that I've applied the moving averages, the fast one being a 9 period and the slow one being an 18 period. Now throughout this test we're going to stick with the 9 and 18, and because of that I don't want to go anything less than a 4-hour chart. We probably could go to a 2-hour chart, but the smaller the time frame, the more frequent the trades, and the more frequent the trades, the less profit per trade, and that could cause us problems, especially when we start introducing some trading costs. So we're using the 9 and the 18 for the length and the 4-hour chart. I've specifically used pound yen because using the moving averages like we're doing helps us identify or get into some early trends. And I know from experience that pound yen tends to trend pretty well compared to the rest of the Forex markets. I've chosen 9 and 18 for no special reason, and later on I'll show you that other lengths also work. The reason I chose 9 and 18 is because MultiCharts actually has a built-in moving average crossover strategy, and their default lengths just happen to be 9 and 18. That's it. So let's apply that strategy to the chart where I have data from January 2008 through to August 2023. Okay, let's switch on the trades for the moving average crossover. And these are actually the built-in trades from MultiCharts. Later, I've modified the code so that we can include the stop loss and the profit target. But for now, let's just have a look at the basic rules. Here you can see the trades on the chart. Look at this trade here. See, the crossover occurred here, and then we bought on the open of the next bar here, and that got us into this early trend, which we didn't exit until here, where we exited the long trade and we went short. So it's a stop and reverse strategy, or always in the market, unless we get stopped out or take profit, as seen in some of the later developments. So let's have a look at the results. That's what the equity curve looks like. Remember, this is 2008 through to August 2023, so a fairly steady upward trending equity curve, so that's really good. It's making 17.4 million yen. This is trading one full lot, and we've got a low percentage profitable. It's a trend following strategy. That's about normal. We've got 1,407 trades, so a decent amount of trades, and we've got an average trade value of 12.4 thousand yen, so that's 12.4 pips. So we haven't got any costs added, but by the time we've taken out some costs, this is still going to be a profitable strategy with an average trade of that value. Equity curve close to close. So although it's not the best equity curve for such a basic strategy and no extra rules, it's a very good start. Step 6 suggests using the moving averages along with other indicators to confirm trade signals. Of course, we can do this with any number of different indicators, but to keep things simple, I'm actually just going to use the moving averages on their own. Step 7 talks again about entries and exits when the moving averages cross. We've already covered this in step 5. Step 8 talks about risk management, and here's where I'm going to show you how to find the best stop loss and the best profit target. And we're going to use a profit target in terms of ratio to the risk. For example, if we find the best stop loss is 80 pips away, then the profit target might be 2 times that, or 160 pips. That's what we're going to look at next. But just before we look at the best levels for those, I want to give you the opportunity to get some more strategies which work on the Forex markets. I've put together 3 more strategies in my 22-page Beat the Markets strategy guidebook. I've got details of the strategy and all the rules of how to trade them. Best thing is, at the moment, if you find the link down in the description, you can get that absolutely free. And if you want more, even better strategies, then you might be interested in my popular trading course. Details of those 6 strategies and how the rest of the course is going to benefit you will also be in a link in the description down below. Okay, so let's go and have a look at the stop loss and the profit target. In step 8 of our list of instructions, if you like, ChatGPT recommended using recent volatility to determine what the stop loss and maybe the profit target should be. So I've used average true range. You can see that I've got average true range down the bottom here, and it's just set at the standard 14 periods. Now, I've done an optimization, first off, just for the stop loss. So let me show you that. And I looked at using 0, which is no stop loss whatsoever. You've already seen the results for that. And then from 0.5 through to 6. For example, 3 would be using a stop loss of 3 times what the ATR level would be. So if we look at the results, we can see that this first result here is 0, so that's pretty good. Using 0.5 is really bad. We don't want to be doing that. It gets a little bit better at 1, and then anything from using 1.5 ATR for the stop loss across through to 6 all works pretty well. So just looking back at the spreadsheet, I will note that although the net profit doesn't really increase that much, what does improve is the maximum intraday drawdown. Using no stop loss, we got a drawdown of 4.7 million. But if we used something like a 2 times ATR, we've got ever such slightly more net profit, but our intraday drawdown is considerably less. It's only 3.3 million, not 4.7. So we're going to use a stop loss of 2 times the ATR. You've just seen the increase in the net profit, but there's what the equity curve looks like also using that stop loss. But we don't want to stop there, we want to have a look at a profit target. So next, I did an optimization. I used 2 times ATR for the stop loss, and then I looked at a profit target in terms of a multiple of the stop loss. So let's look at the results. So 0 is obviously using no profit target. 1 multiple will be using a profit target the same size as the stop loss, which happens to be 2 times the ATR in this case. 2 is double the stop loss, etc. And looking down the net profit, something like 5 times the stop loss works quite well. So we're looking at a reward to risk ratio of 5 to 1. Again, the max intraday drawdown has reduced. The average trade's increased now to 14.4 thousand. and the net profit is 20.2 million. So let's select that and see what it looks like in the performance report. And again, equity curve hasn't changed dramatically, but we know from the numbers we're getting more net profit and less drawdown with a larger average trade. Percent profitable is very similar. Just going back to the profit target, one thing to realise that as long as we're not using a really small profit target of 1-to-1 or 2-to-1, then everything else pretty much works. Even 3-to-1 works, 3.5. As soon as we start getting to 5-to-1 and upwards, it tends to be pretty stable. It's nice to see that everything is profitable. And the last thing I just want to show you, although I didn't want to adjust the moving average lengths in this test, I wanted to keep them just at a default, and I didn't choose them for any specific reason, but I do want to just adjust those just to see what happens, just to see if those 9 and 18 lengths happen to be some sort of miracle lengths. So seeing as 18 is double the length of 9, I'm going to keep it like that, and let's go shorter. So let's go 5 and 10. This hasn't adjusted the moving averages on the chart, it's just adjusted them in the code, which will reflect in our backtest. We can see we've got a lower average trade value now because we're in trades for a shorter period of time. We've got a lot more trades, look, 2,600. Still making good money, 22 million. And that's what the equity curve looks like. Did very well in the early years, and then the rest of the time the equity curve actually looks smoother. But what about going longer than 9 and 18? Let's try 13 and 26. Again, for no specific reason. There's the equity curve, again, nice and stable. Making much less profit, only 12.6 million now. Less trades, look. So the longer the moving averages, the less frequently we're going to trade. Average trade 13,000, that's still going to make money after costs. The point being is the results are stable using those 6 different moving average lengths. Essentially the moving averages are just getting us into trends, and as long as we're using a trending market, the strategy should continue to perform into the future. So there we have it, a profitable trading strategy using the best indicator for Forex trading according to ChatGPT. ChatGPT also told us how to use that indicator, how to use those moving averages and what to do when they cross over, and then how to use a volatility stop loss and a profit target. But what it didn't tell us is what market to use, what time frame, what lengths of moving average, or what values or multiples of the volatility stop loss or profit target. We had to work those out for ourselves. But that's made much easier with the likes of a backtesting software like MultiCharts, which I use. An important takeaway from this strategy was that originally it was said that using the moving averages gets us into trending markets. And it's important that we apply that strategy to a market that trends well. And through experience, I know that pound yen generally trends one of the best of the Forex markets, so that's why I chose that market to apply this strategy to. Had I applied it to one of the other Forex markets, which is more mean reverting, it doesn't matter what lengths of moving average or levels of stop loss or profit target I used, none of it would work very well. This type of strategy only works well on a trending market. So just remember, match the type of strategy to the type of market and the time frame you want to trade. Perhaps next time, in the next video, I can work through that same list of the 9 indicators which ChatGPT recommended and see if we can apply them to some other markets to see if we can get some even better profitable strategies, maybe for another video. Anyway, I hope you've enjoyed this one and I hope you've learned something. If you have, then please give the video a thumbs up and consider subscribing to the channel for more strategy videos like the one you've seen today. I hope to see you next time for the next video, but until then, this is Jared Goodwin, and thank you.